Hey guys, this is Alex Owari from ONG Tax and Accounting Services. So in this video, we're going to explain the forms and the filings for a foreign-owned U.S. multiple-member LLC. And in this case, we're going to be exploring the case of an Australian-owned U.S. partnership. So to give you a little bit of a background, we're going to talk about an LLC that is formed in the U.S. where it has two or more owners. So when an LLC has two or more members, we call it a multiple member LLC. So in this case, we're going to explore a case where all the members are foreign persons. None of them lives in the US. None of them is doing any operation in the US. There's no employees in the US. There's no contractors. There's no independent contractors. There's no offices in the US, and nobody travels into the US to do business. So we're going to look at this specifically in the context of a service partnership where all the partners are providing services through this partnership, but the members are located outside of the US. Now, before we start, let me throw a word of caution out there that this video is for educational purposes only, and it's not meant to be a legal or tax advice. And if at any point in time you need a legal or tax advice, you should always consult with an attorney or a CPA who can help you out. I wrote this article back in 2021. It's been very helpful for some people, but for others, there's a little bit of a confusion because they have so many questions, and the confusion is very much warranted. It's very, very much needed because in the case of a partnership or a partnership, taxation is one of the most difficult and the most complex set of rules you would encounter when it comes to taxes. So when you have a partnership, you have a whole set of multiple rules that you need to be aware of. So sometimes I do understand the confusion, but I'll try and make things clear with some of the things that I mentioned in this article. All right, so in this case, I received a question sometime back in 2021 where this person who is based in Australia basically said that he's a member of a U.S. multiple member LLC in which all the members are non-resident aliens residing in Australia. Because it's a multiple member LLC, it is considered as a partnership. And this partnership does not have any offices, employees, or exclusive contractors or exclusive agents in the US, and that all operations are carried out from their home country in Australia. Since the LLC is organized in the US, he perfectly understands that the LLC is treated as a domestic partnership and it's required to file 1065. This is what he's saying. And he also said that the partnership made the following transaction. Of all the transactions that the partnership made, we're going to focus on the first one here. And we will deal with the other transactions in subsequent videos. But we're going to assume that this is the only transaction. This is the only type of activities this partnership is engaging. So it says that the Australian partners provided software development and consulting services directly from Australia to various US customers. In this case, they have all the operations is being done in Australia and they provide software services and consulting services, but their customers are located in the US. So that's a really good fact. That's something good to know with this LLC. This person did not give many information, but let's also assume that this LLC has a US bank account, has a virtual address, has a registered agent, and then also has a merchant account, maybe Stripe or PayPal or anything like that. So let's put all of this together into this LLC, even though the fact didn't even say anything about it. But let's also maintain the fact that the partners live in Australia and that's where the business activities take place. They have no connection in the US. All right, so in light of the fact that they are providing software services and consulting services, we're going to try to answer all of these questions. The first question is whether the partnership is required to file Form 1065, whether the partners themselves should be filing 1040 NR, which is a non-resident return. So we would address all of this stuff, assuming we are dealing with a service partnership. All right, so I'll start the analysis by saying that all of these questions arises at the intersection of two separate tax areas of law, right? So 2 areas of tax law, which is number 1 is partnership taxation, and then how the U.S. sourcing rules work. So if you want to know where the U.S. sourcing rules are contained in, you will find them in Code Section 861 to 865. It will show you all the sourcing rules. When you click on the link through my article, you will find all the sources. So it labels them out for you. So now that we're dealing with a partnership and we're also dealing with the income sourcing rules, let's build some foundations here. So Treasury Regulation 301.7701-3B1 defines an LLC with more than 1 member as a partnership. So if you have an LLC where there's 2 members, it's a partnership, unless the members chooses to designate it for tax purposes as a corporation. So when you first set up your LLC and you declare on your EIN application form that you are a multiple member LLC, the IRS is going to send you an EIN confirmation letter that shows that you are a multiple member LLC or you are a partnership. And in the middle of the EIN confirmation letter, the IRS will give you a date, a deadline where you have to file your partnership return. It will tell you what type of forms you file. Usually it would say from 1065, and then it will give you the deadline to be March 15 something. So when you have an LLC with more than 1 member, it's a partnership, unless the members have chosen to elect to be treated as a corporation. So if you form a partnership, and you decide that, look, partnership is so complicated, I don't want to deal with it, and I want to rather be a corporation, you don't really have to shut down the partnership and create another corporation. You can actually use the same LLC you have and just get a form called Form 8832 and elect to be a corporation. But once again, if you haven't done that, then the LLC continues to maintain its default status, which is a partnership. Now, how is a partnership income and expenses treated? A partnership income and expenses passes through to the individual partners, who must pay tax on their proportionate share of net gain or may claim a deduction of their shares of not net losses. Now, when we say the partnership must pay taxes on their proportionate share of net gain or losses, we're not just saying that the partnership must pay taxes in the U.S. You have to look at your situation and whether you need to pay taxes in the U.S. or in your home country, or both. But the fact that we write here to say partnership must pay tax on their proportionate share doesn't mean that this really applies to U.S. It also applies to wherever you're subject to taxes, you pay taxes on that. We'll still build a foundation to determine whether these partners, based on the services they are providing, are required to pay taxes in the U.S. Alright, so continuing to build a foundation, our Internal Revenue Code Section 701 provides that a partnership is not liable for federal income taxes. Like I said earlier, persons carrying on the business as partners are liable on their separate and individual capacities for the income taxes arising from the partnership operation. Once again, when we say they are liable for taxes, it may not be U.S. taxes. It could be your home country's taxes. So don't let these things confuse you. When we write like this, we are assuming that you have to pay taxes somewhere. And if you're lucky and you don't have to pay taxes somewhere, then that's good for you. Now let's get some case laws too. What does the case law say? So in the United States versus Bassier, which is one of the cases decided in 1973 by Supreme Court. Now the Supreme Court held that for taxation purposes, partnership are conduit through which the tax-paying obligation passes through the individual partners. So once again, this also means that the partnership itself is not taxable, but then the partners use the partnership as a vehicle to conduct their business. And once that vehicle is parked, whatever is in the vehicle belongs to the partners. So a partnership does not pay income taxes, but they still have to file the 1065, which is an information return. Now, another case law that also talks more about partnership and how they are treated also said that in Miller versus Commissioner of Internal Revenue, this is a case which I think was decided back in 1969. So in Miller versus Internal Revenue, the court held that foreign partners' distributive share of U.S. domestic partnership is excludable only to the extent that it represents his share of the firm's income from sources outside the United States. So this actually means that foreign persons, and the rules we have in the US for income sourcing is that when a foreign person receives income that is foreign source, it's generally not taxable unless that foreign source income is effectively connected to US trade or business. And there are several factors that could cause a foreign source income to be effectively connected to US trade or business. But it's not very common that a foreign person will engage in activities to cause an income that they earn in a foreign country to be taxed in the US. So generally, when a foreign person earns foreign source income, it's not taxable. And because the partnership is just a conduit or a vehicle or a flow through, whatever income the partnership makes in that foreign country would also not be taxable to the foreign partners. Now, before we go further, let me pause here and also say that this video is only addressing US LLCs with foreign owners. So if you have a US LLC with US members or US partners, or you even have a mixture of US and foreign partners, this video is not for you. We're dealing with LLC that has pure non-resident aliens as members, and there's no US involvement in it. So let's get that straight. Alright, so having recited all these rules and the foundation we've laid so far, let's also say that the partnership must file an information return each year reporting items of income, deductions, and credit, and then where these income, deductions, and credit are also allocated among the members who bear the tax consequences for them. Once again, when we say who bear the tax consequences, it means that the partners are expected to pay taxes somewhere. Could be in the US or could be in their home country. But to determine whether you need to pay taxes in the US, you need to follow the income sourcing rules that I showed you here. The income code section 861 to 865 to determine where the income is coming from and whether it's taxable in the US. So the allocation to each partner will be reported on Schedule K1 to the partnership Form 1065. Now, Schedule K1 is not the only form. For 2021 going forward, there is also additional forms that needs to be completed when you have items of international relevance, such as foreign operations, like this partnership is engaging, and then when you have foreign partners itself. So you need to also be mindful that whenever you have a situation like this, where you have a partnership with foreign partners, there's going to be K1, K2, and K3 to file. Now, I'm also going to address two issues. One may ask me, so Alex, you said that this partnership have foreign source income, so why should they even file Form 1065? It's pretty simple. The 1065, your partnership is a domestic entity. It is required to file Form 1065, which is an information return, to tell the IRS what it's doing. The IRS doesn't know you have effectively connected income or you have foreign source income. So they are not sure what you're doing. So when you file these forms, you put them on notice, you tell them what you're actually doing. And on these forms, you report whether the income is foreign source or whether the income is US source, whether it's ECI or FDAP, and all of that stuff. So these forms are very crucial. It needs to be reported. Even when you think that 100% of the income you're getting from this partnership is not taxable in the US, you still need to file the information return. The second question that I also get is, some people form these partnerships and the only thing they basically pay is usually the formation, and then they also pay for registered agent services and virtual address, and sometimes business does not take off. For them, they think they don't have any activity, which is really not correct. The moment you form the LLC, you have an activity. You pay the registered agent, you have an activity. You pay someone to advise you on how the LLC is going to operate. You have an activity that you need to report. I have seen many people say that, oh, I did not have any income, I did not have any expenses, and so I'm not required to file these forms per the instructions. That may be correct at a point, but you are actually trying to explain these rules based on how the old ways of general partnership work. So you see, in the past, we have what we call general partnership, even before these LLCs became a thing. when the rules was first set up, most of the time you could have two people come together to just do business. And when they come together to do business, to make profit and all of that, it is considered as a general partnership. Because there is no entity involved in a general partnership, sometimes maybe second year they can decide not to do any business. They don't have to even pay any state registration fee or any registered agent fee because they haven't formed any entity. They are operating as a general partnership. So for those people, they can actually say they don't have any activity because they didn't pay anyone. But here you are, you have an LLC. You're supposed to be renewing the LLC. When you formed it, you pay someone to actually form the LLC for you. You pay for operating agreement, you pay for consulting and all of that. So when we talk about a company or a partnership that does not have an activity, an LLC will not fall into that category because at a minimum, you'll be paying registered agent fees and you'll be renewing the LLC, whether it's formed in Delaware or Wyoming, you'll be paying money to renew it. And for those activities, the IRS wants to know how the company is conducting its business, even if it's just renewal fees. So I hope I have addressed those two situations. They are very crucial. They comes up all the time. Now let's address the U.S. income sourcing rules. Now, the source of income is very important for U.S. persons and it's also important for foreigners. Now, it is important for U.S. persons because when a U.S. person sometimes work from abroad, they need to know what their foreign source income is to be able to figure out whether they can qualify for foreign earned income exclusion or even foreign tax credit. A foreign person is generally not taxed on foreign source income. So foreign persons usually wants to have foreign source income and then they will feel happy about it. For the purpose of this video, we're not going to talk about U.S. persons and their source of income. We're dealing specifically with foreigners that have U.S. multiple member LLCs. The United States taxes foreign person in two ways on two types of income. A foreign person can be a non-resident alien or a foreign corporation. The first item of income that the U.S. taxes them on is U.S. source investment income, FIDAPI, that most people call it. If you click on the link here, you would see all the types of income that falls into the FIDAPI bucket. And then the second source of income is income that is effectively connected. So let's see what we have here. So if you go here, the IRS explains what is generally considered as effectively collected income. So if you're a foreign person, you need to be worried about these two types of items. And as I've said earlier, foreign persons prefer foreign source income because foreign source income is not taxable, generally not taxable to a foreign person. Unless there's some exceptions, such as your activities, whether the foreign source income is considered to be effectively connected to the U.S. trade or business. And as I've explained, in my practice, it's not very common that I see someone, a foreign person earning foreign source income and done something in the U.S. that has caused that income to be effectively connected. It doesn't usually happen, but it is there. It can happen. As I have also said, a partnership retains its character whenever it flows through income to the individual's personal return. So if 100% of the partnership income is foreign source, then 100% of the partner's allocable share of the income would also be foreign source. If 100% of the partnership income is service income, then 100% of the partner's allocable share will be service income. It's just like that. That is how flow-throughs work. Transparent entities, that's how they work. Now let's look at some of the issues that was raised here. It said Australian partners provided software services and consulting services directly from Australia to US customers. So we're going to talk about the income sourcing rules. So for services, what we should be concerned about is Internal Revenue Code Section 875. It specifies that where a partnership is found to be engaged in U.S. trade or business, the foreign partner would also bear the consequences of such attribution, meaning that the foreign partner would also be treated as if he is also engaged in U.S. trade or business. So if you form a partnership and you've hired employees, dependent agents, exclusive contractors, you have an office here, you're actually traveling here to do business, you will be considered as engaged in U.S. trade or business in most cases. And the partnership, if the partnership has hired employees, whatever the partnership is doing could also be imputed or be attributable to you, even though you may be in your foreign country and hasn't even traveled to the US before. But in this case, the fact that was provided to us, all the partners lives in Australia. That's where they do all the work in Australia. The fact did not indicate that they have any employees or offices or anything like that to create a US trade or business. So we move on with the analysis. Section 875 determines the taxable status of non-residents partner in a partnership engaged in US trade or business. And then Section 871 determines the manner in which a non-resident partner in a partnership shall be taxed. And then Section 872 limits the income to be taxed. So if you have time, you can review all of these code sections. Since this person indicated that the partnership does not have an office, employee, or exclusive agent, or a partner residing or even conducting business in the US, it is fair to conclude that this partnership may not have US trade or business. Therefore, the income referenced above cannot be effectively connected to US trade or business. And then we also go forward to explain under Section 86283 that the source of compensation for personal services, which is basically what this partnership is providing, is the country where the services are performed. So if you're sitting in Australia and providing software development and consulting services, then Australia is the country where the income needs to be sourced, regardless of where the payer resides, the residence of the recipient, the time and the place of the payment, and the place of contracting. So it really doesn't matter whether it's a US person that is paying you, whether it's Microsoft that's paying you, whether it's Amazon that's paying you, whether it's Dell that's paying you, whether it's a school that's paying you. As long as the services was not performed in the US, it is not a US source income. And as long as you do not have any physical connection here in the US, the income that this partnership is receiving is not effectively connected to US trade or business. Now let's move on. So this partnership income is from sources outside of the US, Australia to be specific, for services that was performed by its members and employees abroad. And as explained earlier, the foreign source income earned by non-resident alien will not be subject to taxes, even though there's a US LLC set up for this operation. We would also say that it's not just only the LLC. I mean, assuming the partnership has a bank account and it has a virtual address, a registered agent, the analysis will still be the same. So gross foreign earned income and related foreign expenses of the partnership for all the partners must be separately stated. Foreign income and expenses are generally reported in box 16 of Schedule K1. When you look at the K1 now, there's really nothing there. There's no boxes to report anything there. It's basically a checkbox. K1 box 16 is basically a checkbox here that you're going to check, and then you attach K2 and K3 to the information returned from 1065 and declare all the foreign transactions. So in this case, this U.S. Multiple-Member LLC with Australia partners are going to file 1065, and then they're going to attach K1 and K2 and K3. The individual partners, based on the fact that has been presented, because all the partners are foreign persons and because all the income is foreign source, they will not be required to file Form 1040 NR under the fact that's provided because the services income is foreign. Like I said earlier, for tax year 2021 and beyond, additional schedules, namely K2 and K3, has been added. And so it's very important that when you're filing a partnership return, you take note of those things. Now, the schedules are also designed to provide proper clarity for partners and how to compute their U.S. income tax liability with respect to international items of tax relevance. And then this schedules also replace, and supplement, clarifies, and reporting of certain amounts reported on Schedule K1 1065 Part 3, line 16, which I have already stated. So in summary, this partnership receives service income through the partnership they have. All the income was foreign source because all the members performed the services from Australia. And then finally, they need to file Form 1065, but partners themselves will not be required to file 1040 NR because there's no US taxable income. So I hope this helps you guys out. And if you have any questions, please feel free to use the link below and book an appointment with me. In the subsequent videos, we'll talk about what if the LLCs receiving interest, dividends, royalties, and capital gains. We'll talk about that. But for this video, we explore situations where it's just a service income. So I hope this helps you guys out, and you guys have a good day. Bye.